Welcome to ETF Leaders, powered by the New York Stock Exchange. I'm Judy Shaw, and joining me today is Tom Stout. Tom is COO with ARK Invest. Welcome, Tom.
Thanks, Judy. Great to be here.
So, Tom, tell me, why does ARK Invest focus solely on investing in disruptive innovation?
We believe that disruptive innovation is not only underweight in most portfolios, but also that it's the most inefficiently priced portion of any equity market. And so investors who tend to think of these new technologies as either ideas or concepts, or if they're in company form in the private markets, actually have exposure to them in the public markets. And because of the fact that investing has gone and swung very passive over the course of the last 10 to 15 years, these are also very inefficiently priced. And so by focusing solely on that topic, we believe that we can have the research required, have the ecosystem and the portfolio management skills to focus in on these areas, which represent really exciting growth opportunities for portfolios.
What are the key areas you believe will experience disruptive innovation in the next 5 years, and why?
So we focus our research around what we call 5 general purpose technology platforms. And these are platforms that are really converging between products and services to really create the new economy. So we think the 5 most exciting areas, and certainly those that represent growth and the new world, are focused around DNA sequencing and genomics, automation and robotics, energy storage, what we call the next generation internet, but it's really artificial intelligence, big data, mobile, and also blockchain technology. And so we focus our research around those 5 platforms because the companies that are starting to become leaders, enablers, are the ones that are pushing the new economy forward, that are disrupting a number of traditional companies, including those that tend to be represented in broad-based indexes. And so when you have disruption like that, especially in those areas, and especially as technology seeps into every sector of the economy, we believe there are hidden value traps throughout investment products, even in growth indices. And we want to make sure that investors are aware of that, but also that we give investors an opportunity to benefit from the exponential growth opportunities that they represent.
So what are the benefits of active management within ETFs?
So, we've certainly seen the public equity markets over the last 10 to 15 years swing to passive, and that perhaps is not a surprise in response to coming out of the other side of 08-09. But when you have a pendulum swing like that, there are certain things that passive investing is going to do very well, and there are certain things that passive investing was never designed to accomplish. And one of those, and the latter, is innovation. By definition, innovation is about looking forward, about doing things differently, finding efficiencies, finding productivity, finding cost declines, making new markets in some cases where the markets don't exist. And any form of passive or index-based investing, by definition, is backwards looking with metrics. Even the fanciest of the new smart beta products. And so innovation doesn't fit that mold, and that requires both the type of research and knowledge to understand how these spaces are going to change, and also a portfolio management that knows how to take advantage of those opportunities, recognizes the adoption curves and the volatility, when to enter and exit. And I think most people still tend to have passive in mind when they think about ETFs. But there's really no reason why ETFs can't be actively managed, and certainly have advantages in an ETF wrapper relative to other wrappers like mutual funds. And so for ARK Invest, we feel really good that we're able to bring this type of venture capital-like exposure in the public equity markets where there's inefficiencies, but also do it in the cost-effective, tax-efficient ETF wrapper with active management. Our products are fully actively managed to take advantage of these opportunities.
What's the investment thesis for your newly launched ARK FinTech Innovation ETF?
So we recently launched ARKF, the new ARK FinTech Innovation ETF. It's our 7th ETF from ARK Invest, and we're really happy to bring that to the market because we think that this is one of the areas where perhaps U.S. investors have the least understanding relative to what's taking place on a global scale. And what I mean by that is, in a developed economy like the US, and certainly in the Western world, we're very used to credit cards and the infrastructure that's in place and the sunk costs associated with that infrastructure. And so as a result, there hasn't been that impetus to change, to adapt, to move to more effective, lower cost, and lower barrier platforms. But if you were to take yourself out of that US mindset and look at the world as a whole, Asia in particular, fintech companies really starting to dominate the economic payments landscape, certainly in emerging markets where they don't inherit this infrastructure and the architecture that we've become beholden to here. And so we chronically underestimate just how big this opportunity is. But what we see happening is there is a merging of the financial services sector and the technology sector. And it tends to be with these type of innovations that the adoption curves may start slow in developed economies like the US, but they have radical exponential growth. And so we want to make sure investors are exposed to that or have the opportunity, especially when your traditional financial services sector, ETF or other type of fund, really has very little exposure to fintech. It's really more the traditional banking, maybe asset management. And as those services and as those dollars move off of the traditional architecture and into technology companies, you're going to need to have a strategy that is set to capitalize on that and provide exposure to what we effectively think is going to be the new financial services sector.
So tell me, how should investors use your strategies?
When you think about innovation, you're thinking about growth. It really is aggressive growth. But it's also, as I mentioned, in a lot of ways, it's that hedge to the disruption, to the value traps that we really think are starting to creep up across different areas of the economy simply by change. Change is the one constant, and that's true for investors as well. But if you're not looking for those value traps, if you're not looking to recognize the exponential growth opportunities that innovation and technology provide, and you structure your portfolio in a traditional way without that, then you're going to miss some of those and be exposed to the disruption on a broad scale. So what we would say is that there's certainly slices of growth portfolios, certainly uncorrelated, portable alpha needs. And when you think about what alpha is doing something different than beta, right? It's something different than the market. If you think about what innovation is doing something different than how we've done it before. Better, faster, cheaper, more efficient, more effective, effectively that new world. And so we think innovation and alpha are inherently linked. It's true in the world and in our lives. It's true in investment portfolios as well.
How has ARK grown since its founding in 2014?
So it's been an amazing 5 years. We just had our 5-year anniversary as a firm, and we're very proud of that. And I think a lot of people do know us for our public-facing ETFs, certainly as being a leader in the actively managed equity ETF space, albeit a small but growing space, and we're very proud of that. I think sometimes people don't recognize, though, that ETFs are just a part of what we do. We manage institutional accounts, separate accounts. We have mutual fund exposure, UCITS exposure, and also that we manage close to $7 billion on a global scale with funds on 4 continents, and about half of our AUM overseas, particularly in Asia and Australian markets. And yet at the same time, despite those asset numbers and growth, it's all still focused exclusively on disruptive innovation. And so it's great to be associated with the NYSE, with the ETF community, and we're really proud of the fact that we're able to bring what we believe are institutional quality strategies and active management to the ETF wrapper. But people need to also recognize that while critically important, it's only a piece of what we do, and we're a much larger global firm than that, even though we stay true to our roots in innovation. And we think that that's just, it's important to be able to focus on that, even with everything going on, because investors need exposure to innovation, especially in public equity markets, especially when you have the world changing at the rate now. We feel it in all of our lives that, wow, the world changes so fast and technology moves so quickly, and it's really part of my everyday life. And it's really nice that we're able to help educate, that under Cathie Wood, our CEO and founder's leadership, that we're able to manage, promote, educate, but also provide solutions for investors. And it's very gratifying to be able to do so.
Well, that's great. Thank you, Tom.
Thank you, Julie. I appreciate it, and thank you, everybody. I appreciate the opportunity, and we look forward to continuing work with the NYSE.
And that's ETF Leaders, powered by the New York Stock Exchange.